Morning, guys. It's
Morning.
Signal Centre again, talking ball. This is episode 7. I'm Joe Neighbour, joined again by Steve O'Hare and Ian Coleman. How are we, gentlemen?
All good?
Yeah, very good, thanks.
Good stuff. Off to a exciting start this morning with the news coming out about China and the US.
Yeah.
China and US have agreed to cancel some of the existing tariffs in different phases.
Has this news come from the Chinese rather than from Trump?
Possibly, yes.
Yeah, I don't think Trump's confirmed it yet.
He hasn't signed off on that yet.
No, not yet.
I'm sure
He's
he'll
got
have
out of
something to
bed
say.
yet, is he? He's
No, probably not.
A couple more hours.
Yeah. Okay, so just park that for a second anyway and just talk about gun to the head challenges again. So this is where we call a live trade on the podcast and see how it plays out throughout the day. It gets closed off at 9 o'clock. So yesterday we had a trade from Ian, which was on dollar CAD. Again, he was buying. Steve was selling gold and I was buying New Zealand dollar CAD. Steve and I were both in the red come 9 o'clock. Ian, again, had another winner, another 27 pips there on dollar CAD, which puts him 6 out of 6.
Yeah.
6 trades, 6 winners.
Winner, winner, chicken dinner.
No gloat.
No gloat. So, Ian, it's your honour then, I guess, is it? You're off again. What you got for us today?
I wouldn't mind just having a quick talk about the dollar index again, as it obviously drives most of the majors. So I'm just going to go to the dollar index chart to start with. Now, we've discussed this numerous times already, that big bad candle that was posted on the monthly chart, the October bearish outside. So that focus is still long-term bias to the downside. And we've also got this sort of pivotal area here, which is at 98.37, but we're nowhere near it yet. And if we go to this chart, that's the first impulse move to the downside, double bottom formation, I believe. We're just stalled, obviously, on the back of this news this morning. But 98.37 is here, and I think that's the prime area to turn the dollar bias round. So we might get a pullback, or we are seeing a pullback, but again, quite a nice pivotal area. It's not that far to the downside, 97.76. So I'm still looking for dollar longs. Dollar CAD, even though it's pulled back quite aggressively this morning on the back of that news, all it looks like is just a retest of the channel breakout. So the currency pair that I'm going to go for today, and I'm going to keep with commodity currencies, is this bad boy. So let's just get rid of all of those. I only want one chart. It's a wedge breakout on New Zealand dollar. So again, higher highs, higher lows. Then we've broken out this wedge. It will normally come and retest. I mean, the prime short entry is actually here at 63.85, I believe. But I'm going to have to take it where it is because it is gun to the head. So I'm going short New Zealand dollar at 63.69. I've got a target, wedge target down here. But it's not going to get there today, but 62.55 is the target, and I'm going to have a 40 tick stop again, just because I've got to get inside this trend line. So 63.60. Yeah.
Lovely.
Oh, have you influenced him there, Joe, just so that he gets stopped out?
Try and guide it my way.
Ooh, chicken dinner.
I've got a winner, winner, chicken dinner. That's in admiration of Ian's 6 out of 6.
No, nice. I thought it was a great British roast that you were doing for the Bank of England today.
Oh.
It's got double meaning, that.
Shall I go into my trade of the day?
Yes, please.
I'm looking at gold again.
He loves it.
Loves gold.
I love it. I'm very sort of like basic. This excuse me, let me try and close that down. I've got the squawk going in the background. There you go. And we've got this supportive trend line, horizontal line that I think, once we break there, we'll have a very fast move down. So my target today in gold is a little bit more aggressive. It's a 4-to-1 risk-reward ratio. And I'm looking to set shorts this morning on the intraday around 14.89, but I'll take the entry now at 14.87 and a half. Grabbing everything I can get. Yeah,
It's 0.4, but yeah, you can have that.
the stop
With the spread,
is
0.3.
at 14.95, so 7.5 tick stop.
Yep.
And target is 14.65. We got go back a little further. We can see we got support down here at just around 14.60. So I think
that.
The momentum, MACD turning negative, a little bit of a crossover there. So the momentum shift, we've had this little sideways movement yesterday, a little retest of the Ichimoku cloud, rejection from there, forming a bearish flag, and it's broken the low of that bearish flag. It can be redrawn, and you can sort of put another trend line in just around here. Again, once we sort of like get below these levels, I think I'll be joining Ian on 405R.
Nice. That's what it's come to now. Just got to go for the big old
Yeah,
payouts to try and catch up with Ian.
Clutching at straws. No, I do believe in this trade. I'm short myself, so I'm not wrong.
Nice disclaimer
wrong
there.
I'm not wrong often.
Cool. So I'm looking at sterling yen today, just because it's one that's already triggered from my analysis this morning. Not really a massive fan of sterling pairs at the minute, particularly as it's Bank of England today, but on this 4-hour chart, I've got this triangle that I've been following for the last few days or so, price just ranging in between. We had a breakdown yesterday, and what we're getting today is a retest of the underside of that triangle, just a bit over the top of a 50% retracement. So look at the 61.8. Oh, perfect. Look, it just comes in right on there. So I actually triggered on the intraday analysis at 140.20. So I'm going to get a slightly better entry now at 140.23. I've got a stop above that.
Where'd you get 23 from?
Looking up here, I know 24 now. It's getting better all the time.
140.20 on that chart.
That's where I entered.
To catch you, eh?
We're taking the price now, right?
Yeah. I'm not being tight.
Okay, stop above this swing high. It's quite a big stop, actually, 17 ticks, which will allow, I guess, for a bit of volatility over Bank of England potentially, and targeting a move down to this support down here at 137.60. So looking for about 3.7R on that today.
Lovely.
Let's see how they go, eh?
Yeah, Bank of England expected unchanged, yeah?
Yes, so just follow on from that. Strong expectations the Bank of England will maintain interest rates at 0.75. Expected that there will be some restraint in the press conference from Carney as well, given there's so much uncertainty still surrounding Brexit and the ongoing election campaign. So not a lot expected, I don't think, from the Bank of England today, but I guess we'll wait and see come midday and 1:30 when he speaks. Mark Carney speaks.
Yeah, I mean, they're talking about the focus is mainly going to be on the growth and inflation aspect of the report, just to see what the scope is for potentially another rate cut. But I don't believe it. I think sterling is going to strengthen long term anyway.
So sterling strengthens and dollar strengthens.
I think sterling to the downside initially.
Yeah.
But I think in the long term, I think euro dollar looks weaker than sterling dollar. Put it that way.
Yeah.
Euro sterling, we've just got short this morning, haven't we? At where was it? 86.20, 86.10 trading at the moment, and that's in a descending triangle formation. So euro's got, I think, more bias to break lower, especially when you're looking at crosses than cable, than sterling, I should say, not cable.
Yeah, equities are obviously flying higher again this morning. DAX is up at 13,270, which is the highest it's been since 22nd of May 2018.
Yeah.
If there is any, what's your thought on equities, Steve, with regards to the trade deal? Do you think that could be potentially a top, a case of having bought the news and selling?
Yeah,
I mean, that's selling the news.
Exactly. We're sort of having this sort of like this melt upwards at the moment, and I think the Nasdaq is really one to watch. That's the real tech beneficiary of a trade deal. Nasdaq broke the recent highs again. That's going pushing higher this morning. So I think it's that's just a buy the rumor, sell the fact, keep buying it till the trade deal is done, and then we sort of like there must be some sort of realism coming into the valuations that we've got across the board. So is that an
Looking at
all-time
this,
high
the
in
DAX
Nasdaq?
here, we've got this channel, so it's basically
Previous high.
smashed straight into the top of that channel there. And as it stands, this is a daily chart above that high from the 22nd of May 2018. And
Yeah.
obviously, there's a long way to go before the close today. But if we, having made this new high up here and closed below that support at 13,207, that could be potentially a nice short trade set up for a pullback.
Yeah, I'm for my own book. I'm looking to sell just above the 13,300. I always like the number 13 when it comes to DAX. It always seems to sort of, for some reason, find that little bit of support in front of the big figure and a little bit of resistance above the big figure. So I'm selling around 13,313 this morning. Tight stop on it,
Yeah.
but yeah, looking for a similar sort of move. A little bit of a failure late on.
Interesting.
But again, dollar, very much dollar driven and dollar yield driven. You've got the sort of 10-year yields again, looking at the 2% level. It's a big level, and although we've had a little bit of a pullback this morning, I think that's the main target. So I don't think over the medium term there's anything stopping it. You're going to get people looking for value in returns, and that's as soon as they start to look at 2%, people are going to look at across the board and think that's the value area. So dollar stronger, as Ian says.
Cool. Okay, guys. Well, that pretty much wraps up what we've got to say on Thursday. Don't forget to subscribe on the YouTube channel, and if you're not already there, get involved in the Telegram chat, and we'll see you all tomorrow.
Lovely.
Good luck, guys.
Good stuff.
Good luck, guys.
Andrew. Cheers.
Bye.
Thanks.